The mail theft crisis has exploded into something far worse than most people realize. In fact, the AARP just released a study showing that seniors are losing an average of $47,000 to check washing scams. That's not a typo, $47,000. And here's what's truly terrifying. Your bank might not help you recover a single penny. I'm going to walk you through exactly how this is happening to retirees across America and, more importantly, how to protect yourself and your hard-earned retirement savings. Stay with me. Welcome to Retirement Made Easy. You know, I've been covering financial scams targeting seniors for over a decade now, and I have to tell you, this one keeps me up at night. Just last month, I received a call from a 72-year-old viewer named Margaret from Phoenix. She lost $28,000 paying her property taxes. $28,000 gone. And the worst part? Her bank, Chase, told her there was nothing they could do. Now, when Margaret first told me her story, I thought to myself, wait a minute. I remember check fraud being something banks dealt with back in the day. The bank would eat the loss, not the customer. So I started digging deeper because something didn't add up. How could a retiree on a fixed income lose nearly $30,000 through no fault of her own? What I discovered shocked me, and frankly, it should shock you too. Two major shifts have happened in the banking industry that have left seniors completely exposed. First, banks have quietly rewritten their policies to push nearly all the risk onto you, the customer. And second, criminals have perfected a method that's nearly impossible to detect until it's too late. Let me paint you a picture of how this happens. Imagine it's October and you've just received your property tax bill. Maybe it's $15,000, maybe it's $20,000, maybe more depending on where you live. You've been paying this bill the same way for 30 years, with a check. You trust the system. Why wouldn't you? It's always worked before. So here's what you do. You sit down at your kitchen table, you pull out your checkbook, maybe it's the same checkbook you've been using for years, and you write out a check to your county treasurer. Let's say it's for $18,000. You double-check the amount, you sign it carefully, you put it in an envelope, write out the address, put a stamp on it, and here's the key part. You walk it right to your mailbox, not the post office, your mailbox, because it's convenient, you've done it 1,000 times, and you raise that little red flag so your mail carrier knows to pick it up. 3 days later, you check your bank account online, and sure enough, $18,000 has been withdrawn. You breathe a sigh of relief. Good, you think. The county got my payment. I'm all squared away. You go about your life. Maybe you take that trip to visit the grandkids. Maybe you just enjoy your daily routine. Everything seems fine. Then, 8 weeks later, could be 6 weeks, could be 10 weeks, doesn't matter, you get a letter from the county treasurer's office. It's one of those official-looking envelopes that immediately makes your stomach turn. You open it up, and the letter says something like, Dear property owner, our records indicate that your property tax payment is past due. Please remit payment within 30 days to avoid penalties and potential tax lien proceedings. Now, your first thought is, this has to be a mistake. I paid that bill. I saw the money come out of my account. So you do what any reasonable person would do. You log into your bank account to pull up your statement. Most of us don't get paper statements anymore. They're electronic now, which means you have to actively go online and download them. You pull up the statement from 2 months ago and you start scrolling through looking for that $18,000 check. And there it is. Your heart sinks. The check has cleared for exactly $18,000. But when you click on the image of the check, you see something that makes your blood run cold. The check is no longer made out to the county treasurer. It's made out to someone named James Rodriguez or Maria Santos or David Kim, someone you've never heard of in your entire life. Your hands are shaking as you immediately call your bank. You get through to customer service, explain what happened, and they transfer you to the fraud department. You tell them, Someone stole my check and changed the name on it. This is fraud. I need you to reverse this transaction. And this is where it gets truly heartbreaking. The fraud specialist looks up your account, reviews the check, and says, "I'm so sorry this happened to you, but I'm seeing that this check cleared 62 days ago." Under our bank policies and federal banking regulations, you had 30 days from the statement date to report any discrepancies. Because it's been more than 30 days, we cannot reverse this transaction. The loss falls on you, not the bank. You can't believe what you're hearing. You ask to speak to a manager. The manager says the same thing, perhaps with more empathy, but the answer doesn't change. You didn't do anything wrong. You didn't give your account information to a scammer. You didn't click on a phishing link. You didn't fall for some elaborate con. You simply mailed a check to pay your property taxes the same way you've done for decades. And yet, you're now out $18,000 and you still owe the county another $18,000 because your original payment never arrived. Now, let's be honest for a moment. How many of you watching this video check your bank statement within 30 days of every transaction? I mean, really scrutinize every check image, every withdrawal. My guess is fewer than 1 in 4. And here's why most people don't catch this. Everything appeared to go exactly as planned. You wrote a check for $18,000. Exactly $18,000 came out of your account. The county didn't immediately notify you about a missing payment because government agencies take months to process things. There was no red flag, no alarm bell, nothing that would make you think I should really check that statement right away. So let me explain exactly how these criminals are pulling this off, because understanding the mechanics is the first step in protecting yourself. The scam is called check washing, and it's devastatingly simple. After you put that check in your mailbox and raise the red flag, a thief comes by, maybe in the middle of the night, maybe in broad daylight while you're at the grocery store, and they steal your mail. Sometimes they have a lookout who watches for raised flags on mailboxes during tax season, property tax season, or the first week of any month when people are paying bills. Sometimes they've bribed a postal worker to hand over checks. Either way, they get their hands on your check. Now, here's the scary part. They don't need to forge your signature. They don't need to create a fake check. Your signature is real. The check itself is legitimate. The amount is correct. The only thing they change is the name of the payee. And they do this using common household chemicals, acetone, which you might have in your nail polish remover, or bleach, which is under everyone's sink. They carefully apply these chemicals to dissolve only the ink where you wrote the payee's name. They don't touch the amount. They don't touch your signature. They don't touch the date. Just the payee name. Once that ink is removed, they write in a new name in the same color ink you used. If you used a standard blue ballpoint pen, which most people do, they use a blue ballpoint pen. The check looks completely legitimate. Then they either deposit it into an account they've opened specifically for this purpose, or they take it to a check cashing store. And here's the thing about checks made out for property taxes or the IRS, criminals know those checks are going to have money behind them. Nobody writes a bad check to the government intentionally. Under federal banking rules, banks have 2 business days to clear a local check and 5 days for an out-of-state check. So if the criminal sets up a local account, which they always do, that check clears in 2 days and the money is moved from your account to theirs. By the time you discover the fraud weeks or months later, that money is long gone, probably moved through several accounts or withdrawn as cash. Now, you might be wondering, why are seniors the primary target? Well, there are several reasons and none of them are your fault. First, retirees are more likely to still pay bills by check. Younger generations have mostly moved to electronic payments, but if you're over 65, there's a good chance you prefer the tangible nature of writing a check. You want that physical record. You want to control when the payment goes out. I get it. It makes perfect sense. Second, seniors often write larger checks. property taxes, estimated tax payments to the IRS, insurance premiums, charitable donations. These tend to be substantial amounts, which makes them more attractive to thieves. Third, and this is just a sad reality, criminals know that many seniors check their bank accounts less frequently than younger people who grew up in the digital age. If you're checking your account once a month when the statement comes out versus someone who checks their banking app 3 times a week, you're less likely to catch the fraud within that critical 30-day window. So now let's talk about what you can do to protect yourself, because this is the important part. Number 1, stop mailing checks from your home mailbox. Period. I don't care how convenient it is. I don't care that you've been doing it for 40 years without a problem. The risk today is exponentially higher than it used to be. If you absolutely must mail a check, take it inside the post office and put it in the mailbox inside the building, not the one outside in the parking lot, inside the post office where postal workers can monitor it. Number 2, switch to gel pens immediately. Gel pen ink chemically bonds to paper in a way that ballpoint ink does not. When criminals try to use acetone or bleach on a check written with gel ink, the chemicals either damage the entire check or leave obvious evidence of tampering. Now, gel pens are more expensive. They typically cost $2 to $3 each versus 50 cents for a ballpoint, but I promise you that small investment is worth it. Go to any office supply store and buy a pack of gel pens today. Keep them separate from your other pens and use them exclusively for writing checks. Number 3, consider moving to electronic payments for large transactions. I know this might feel uncomfortable if you've never done it before, but the IRS accepts electronic payments directly from your bank account. Most county treasurers do too. Insurance companies certainly do. The reason I'm pushing this is simple. You cannot wash an electronic payment. The scam doesn't work. The money goes directly from your account to the payee with no opportunity for interception. Number 4, if you must write checks, monitor your account obsessively for the next 30 days. I'm talking about logging in every 2 to 3 days and checking every transaction. Yes, it's tedious. Yes, it's time-consuming. But it's the only way to catch this fraud within the window where your bank might actually help you. Number 5, set up account alerts. Most banks will send you a text message or email whenever a check over a certain amount clears your account. Set that threshold at something like $500 or $1,000. That way, when your $18,000 property tax check clears, you'll get an immediate notification, and you can verify right then and there that it went to the right place. Now, if you're watching this and thinking, "Oh no, I think this might have already happened to me," here's what you need to do immediately. First, contact your bank in person. Don't call, don't email. Walk into the branch and speak to the branch manager face to face. It's much harder for someone to dismiss your case when you're sitting across the desk from them. Bring all your documentation, the letter from the payee saying they didn't receive payment, your bank statements, everything. Second, file a police report. Even if the police tell you they probably can't catch the person, you need that report number for insurance purposes and to document the fraud. Third, report the theft to the U.S. Postal Inspection Service. They have a website where you can file a report online. Mail theft is a federal crime, and if there's a pattern in your area, they need to know about it. Fourth, contact your homeowner's or renter's insurance company. Some policies have coverage for financial fraud, though the limits are usually pretty low, maybe $1,000 to $5,000. But every bit helps. Fifth, if your bank denies your claim, consider filing a complaint with the Consumer Financial Protection Bureau. You can do this online at consumerfinance.gov. They can't force your bank to refund you, but they can investigate whether the bank followed proper procedures. Finally, close that checking account and open a new one. I know it's a hassle to update all your automatic payments and order new checks, but your account number and routing number are now in the hands of criminals. They may not use it immediately, but the information could be sold to someone else 6 months from now. Look, I wish I had better news. I wish I could tell you that banks were going to step up and take responsibility for this. But the reality is, the burden is on us to protect ourselves. The rules have changed, the criminals have adapted, and we need to adapt too. If you found this information helpful, please share this video with other retirees in your life. This is happening all across the country, and the more people who know about it, the fewer victims there will be. And if you have a topic you'd like me to cover on this channel, drop it in the comments below. I read every single one. This is Retirement Made Easy, and I'll see you in the next video. Stay safe out there.